Most intraday traders fail because they operate with a multi-timeframe blind spot. They accelerate into what looks like an open lane, only to instantly shatter against a massive higher timeframe resistance wall that they didn't even know was there. The trap is set when you isolate your view to a micro timeframe, like a standard 1-minute chart. A minor green candlestick creates the illusion of explosive momentum, but the order book reality is unforgiving. When you act on that isolated microsignal, you are often buying the absolute ceiling, injecting your capital directly into heavy institutional sell orders resting just overhead. Relying on a single, lagging timeframe leaves you entirely disconnected from the macro forces that actually dictate market direction. You cannot trade the micro execution window safely if you are blind to the macro tide. To survive, we have to eliminate the practice of constantly flipping between 10 different chart windows to guess the overall trend. The solution is to compress the entire market matrix directly onto your primary execution screen. This diagram shows the foundational architecture of the multi-timeframe density ribbon. Rather than viewing timeframes in isolation, we capture the individual velocities of multiple timeframes simultaneously. Think of this system as a mechanical centrifuge. It spins rapidly to separate retail market noise from the raw, high-velocity core of institutional funding, stacking those individual timeframes into a single unified visual mesh. To operate this tool safely, there is one primary rule. You must be able to look at this flattened, expanding, and contracting structure and visually audit its current state within 3 seconds. Consistent trading results require the exact structural synchronization between the macro tide and your micro execution window. We decode this synchronization by mapping the ribbon into 3 structural states. The first is the energy storing phase, known as the compression knot. Look closely at this telemetry. The multiple timeframes tightly coil, cross over, and flatten out into a narrow horizontal band. Here, price is locked in a tight balancing loop, absorbing volume and building massive kinetic energy. During this phase, smart money desks are quietly absorbing liquidity and accumulating serious size, preparing for the next macro move. The operational law for this state is absolute. Lock your hands. A flat, tangled compression knot is a toxic, untradeable congestion zone. You sit out and wait for a clear breakout vector. When that stored energy finally releases, we enter the velocity expansion phase, the linear ribbon flare. This diagram shows the exact moment of transition. The strands detangle and fan open with perfect parallel symmetry, locking into a steep 45-degree slope. Notice how the color density intensifies as the distance between the top and bottom layers dynamically expands. When every time frame from the micro to the macro expands in perfect 45-degree symmetry, it indicates that large-scale institutional buying programs are operating across every tier of the order book simultaneously. The operational law here is to align your bias strictly with the direction of the flare. You are a buyer in an upward flare and a seller in a downward flare, no exceptions. Attempting to fade or countertrade this specific synchronized state means stepping directly in front of a programmatic freight train. Once a trend is established, it requires refueling. This brings us to the third structural state, the B-wave chassis test. Look at the visual contradiction in this diagram. The macro ribbon matrix maintains its parallel expansion slope, but the short-term price drops sharply backward, drifting directly into the interior layers of the ribbon structure. Algorithms execute this movement as a routine liquidation sweep, intentionally cleaning out weak retail hands who entered late at the peak of the move. As price enters these core interior layers, institutional buying programs actively step in to defend the matrix, executing orders to reprice the asset at a temporary wholesale discount. Your operational law here is to drop the clutch. You monitor the internal layers for limit absorption, wait for price to print a sharp structural wick directly off the ribbon core, and execute your continuation entry. Interior layers as an algorithmic concrete floor, you transform a sudden retail panic event into a surgical scalping opportunity with maximum asymmetry. Operating any multi-timeframe system safely requires a strict mathematical invalidation node, a clear line where the thesis is wrong. We establish this boundary using the opposite edge of the ribbon depth. As seen in this diagram, the structural guardrail is mapped exactly 1 tick past the bottom exterior layer of the fanned mesh. The operational law dictates that you hard code your stop loss precisely at this boundary. If price breaches completely through the full depth of the ribbon, the trend velocity is mathematically broken and the trade is structurally invalidated. Hard coding your risk precisely at this mathematical guardrail eliminates all emotional negotiation from your intraday trading. When the edge breaks, you are out. We synthesize these structural states into a single executable logic table, the MTF Ribbon operational matrix. This table maps visual geometry directly to tactical operation laws. The compression knot dictates an absolute trading ban. The parallel flare requires you to establish a directional bias, and the chassis test is your cue to hunt the floor. The execution rules are binary. If the ribbon is flat, you sit on your hands. If the ribbon fans out at 45 degrees, you execute in the direction of the tide. And your entry trigger always requires patience. You must wait for the physical wick rejection directly off the ribbon core before committing size. Internalizing this matrix transitions you from blindly reacting to isolated micro-candlesticks to proactively executing right alongside institutional algorithms. A traditional retail chart is often treated like an emotional art project, full of subjective lines and guesswork. Our final objective is to process raw, chaotic market data through a mechanical centrifuge, turning your chart into a clean, data-driven quantitative logistics grid. Stop guessing where the macro tide is moving based on single timeframe illusions. Calibrate your system to the ribbon telemetry, let the centrifuge filter out the noise, and track the true multi-timeframe density. By mapping multi-timeframe structural density, you stop fighting the tape and align your capital with the programmatic realities of the market.